Alright everyone, welcome back to Crypto Brain. Today we're analyzing something that has recently started attracting attention across multiple crypto communities, and that is the growing discussion around Toshi and the possibility of major exchange infrastructure beginning to interact with it. Now, if you have been watching the market carefully over the past few weeks, you may have noticed something interesting. While much of the retail market remains focused on large-cap tokens, a quieter narrative has been building underneath the surface. A narrative involving whale accumulation, increasing market visibility, and speculation surrounding potential interaction with one of the largest trading platforms in the entire digital asset industry. And of course, that platform is Binance. Whenever a token begins appearing in conversations connected to Binance, traders immediately start asking the same question. What happens if Binance actually begins using or integrating exposure to that asset? Because historically, when a token becomes associated with the Binance ecosystem in any meaningful way, the impact on liquidity can be extremely significant. This isn't just hype. This is simple market structure. Binance currently operates as one of the largest liquidity hubs in the entire cryptocurrency market. Millions of traders use the platform daily, and the trading volume flowing through Binance often determines which tokens receive global attention. When a token suddenly becomes accessible to that level of trading infrastructure, several key things begin to happen. First, liquidity expands. Second, trading volume increases. And third, price discovery accelerates dramatically. For smaller capitalization assets like Toshi, this type of exposure can completely transform how the market values the project. But exchange speculation is only one part of the current narrative. The second major factor that analysts are paying attention to involves whale activity. In crypto markets, whales often move long before retail traders even realize what is happening. Large holders don't usually chase hype rallies. Instead, they accumulate quietly during periods of low attention, building positions while price action remains relatively stable. Recent wallet tracking across several large addresses suggests that accumulation behavior may already be taking place. Instead of aggressive buying during price spikes, the activity appears to be happening during consolidation phases. This pattern is extremely common among large market participants. The goal is simple: build positions early before a potential liquidity expansion attracts the broader market. And this is exactly why some analysts believe the current situation surrounding Toshi is becoming more interesting. Because when whale accumulation begins aligning with exchange speculation, the market starts paying attention. But to understand the potential impact, we also need to talk about market capitalization. At the moment, Toshi remains relatively small compared to many of the dominant tokens currently leading the crypto market, and that creates a very important mathematical dynamic. Smaller market caps require significantly less capital to move price, which means if a large amount of trading liquidity suddenly enters the market, especially from a major platform, the percentage price movement can become extremely aggressive. This is one of the reasons early-stage tokens occasionally experience explosive rallies. Not because they are guaranteed to succeed, but because the market cap structure allows price discovery to move much faster. Now let's combine all three elements currently forming the narrative. First, speculation surrounding Binance potentially interacting with the asset. Second, growing signs of whale accumulation. And third, increasing awareness across the crypto community. When these three forces begin developing simultaneously, traders often describe the situation as a potential liquidity ignition phase. This is the stage where demand begins increasing faster than supply. When that happens, the market enters a discovery cycle, and discovery cycles are where the most aggressive moves tend to occur. Of course, experienced analysts always emphasize that the crypto market remains extremely volatile. Price expansions can happen quickly, but corrections can happen just as fast. Nothing in this market is ever guaranteed. However, what makes the Toshi narrative interesting right now is the timing. The combination of whale positioning, exchange speculation, and a relatively small market capitalization creates the kind of environment where large moves sometimes begin forming. And that's exactly why more traders are starting to monitor the situation closely. If liquidity expansion does occur, particularly through a major exchange ecosystem, the impact on trading volume could be substantial. More liquidity means more buyers. More buyers means faster price discovery. And faster price discovery is what eventually drives the large rallies that crypto markets are known for. For now, analysts are watching several indicators very carefully: wallet accumulation patterns, trading volume growth, and any developments connected to the Binance ecosystem. Because in crypto markets, the biggest moves rarely begin when everyone is already watching. They usually begin quietly, while only a small portion of the market understands what might be developing. And if the current narrative surrounding Toshi continues building momentum, the next phase of market attention could become very interesting indeed. So keep watching the liquidity signals, keep monitoring the whale activity, and most importantly, always remember that in the world of crypto, early information often makes the biggest difference. This is Crypto Brain, and we'll continue tracking this story as it develops.